All right, so this is the 2022 company account question. So nothing too much in it. We've already done this, but this is the video of it. So stock cost was 82.8. It was discovered that goods had been received from a creditor on a sale or return basis. These goods have been entered in the books as credit purchase. The retail was 95.0, which is cost plus 25%. So we're going to need to find the cost price. So we take that 9250, divide by 125 and multiply by 100. You get a cost price of 7,400. So you bought the stock, which costs you 7,400 to buy, but it's on a sale or return basis, which means you don't actually own it until you sell it. So it's never really included in stock. So we have to reduce our closing stock by the cost price, and we have to reduce purchases and creditors also by the cost price. So the purchases is 905, and creditors starts off at 81.5. So we take them away because we don't own them. So it's slightly different from when we sell goods on a sale or return basis, which increases stock by the cost price and reduces sales and debtors by the selling price, because you obviously sell goods at a selling price. But when you buy goods, they're all at the cost price. So that's the first one done. Provide for depreciation on equipment. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. So that's going to be important when we do the accumulated depreciation. Alright, so note, it was estimated that office equipment has a useful economic life of 6 years with a residual scrap value of 4% of original cost. Now that means when you depreciate, you only depreciate 96% of the equipment. You don't depreciate all of it. So we start off, equipment starts off at 460. We're going to take away the equipment cost. We're going to take away the 65,000 that we sold, and add on the 45,000 that we bought. So that's 440. Alright, when we depreciate equipment then, we're depreciating the 440 because you're not depreciating, there's no depreciation on the 65,000 because you sold it this year, but there's a full year's depreciation on the 45,000 because you bought it. So you're just following the instructions that you're given. So the depreciation of equipment is 96% of 440, because we're only depreciating it down to 4%, and it's written off over 6 years, so divide by 6. So that's 70,400. Then your accumulated depreciation will be whatever depreciation you started off with. So in this case, the difference between 460 and 354. So that's or 357. That's 103. Add on the 70,400 this year's, and then take away the depreciation on the one you sold, the one you traded in. So the 65,000. So we're going to take that 65,000. Remember, we're finding 96% of it, so you're not depreciating it to zero, and it's been written off over 6 years. So a full year's depreciation in the year you bought it. So you bought it on the 1st of the 10th, 2017. So you have a full year's depreciation 2017. you have a full years in 18, you have a full years in 19, you have a full years in 20. So you've depreciated for 4 years. You haven't depreciated the last one for 2021. So we're going to multiply that by 4/6. Okay, so just copy that there. I don't know what I'm after doing there, sorry. I'll just say again, so 96% of 65,000 by 4/6. So that's 41,600 gets taken away. So 4 years depreciation. So I'll just work that out. So 131,800. All right, and as always, you have a profit or loss in the sale of the van. So any asset you sell will have a profit or loss. So that'll be the cost of 65,000 minus the depreciation of 41,600. And that'll be 24,400. That's its value. It's false. All right, the allowance given in the question is 23,000. So you've made a loss then of 1,400. 41,600. Sorry, that should be. So this should be 23,400. So you've made a loss of 400, which will be an administration expense. All right, so the check for the net amount is included in purchases. So the net amount is the new van minus the allowance. So the new van cost us 45,000. We got an allowance of 23, so there's a check for 22, which gets taken out of purchases. Okay. That's that one. Number 3, during the year a warehouse which cost 120 was destroyed by fire. So buildings have to come down by 120, or land and buildings have to come down by 120. So you've got 1760, it's this number here, minus 120. So that's 1640. Okay, now the insurance company has agreed to contribute 115,000 in compensation. So that's an insurance claim due of 115, and the difference between the two of those is a loss on insurance, the loss on the insurance claim of 5,000 euros. The loss on the fire, 5,000 euros. Okay, so it's fairly straightforward. And then it tells us we have to depreciate buildings at 2% of cost. So that's 2% of 640 because there's 1 million land. So that should be 12,800. Now, anytime we've depreciation, we've accumulated depreciation or revaluation reserve. So it's 0 plus 12,800. There was no depreciation mentioned in the question. So it starts off with 0, goes up to 12.8. All right. The bank working then. So it's bank reconciliation. So it says the figure for bank, the trial balance was taken from the firm's own record. So we've bank balance and the trial balance of minus 68.3. And in our working, we have a bank balance of, or in the bank's working, they have a bank balance of 48,950. So neither of those are correct, so we have to find out what's correct. So anything that we've done, the bank haven't done, and anything the bank haven't done, we've done, we have to do. So if we've done it, it only affects the bank working. It doesn't affect anything else. If we didn't know about it, we have to do the double entry. So the first one is a check for 4/6 issued to a director and not be presented for payment. So it's in our accounts. It's in this 48,300 because we gave them the check. We know about it. But if it hasn't been presented for payment, well, then the bank don't know about it. So until they get it. So it's 4950. So you just put it in that. You don't have to worry about any other payment because it's in our accounts. Now the other three you will. So the second one, a check for 26.7 had been entered in the books as 27.6. So it's correct in this second figure, but it's not correct in our account. So what we do, we take away the amount of the check. So 26,700, and add back on the mistake to get it back to 0. It's like a suspense. And you do the exact same thing for creditors, because when you write a check, if it's in the accounts incorrectly, it'll be in all the accounts incorrectly. So you need to change creditors by the same number. So when you write a check, it reduces the amount that's owed to creditors. So minus 26.7 is the check. So add back on the mistake, 27.6. Third one, a credit transfer of 4.5 have been received. So credit transfers go directly to the bank. So we didn't know about it. So the 4.5 goes into our bank account. It's already in the second one. It's received in respect of a debtor who has been declared bankrupt. So debtors need to go down. So when a debtor is declared bankrupt, he no longer owes us any money. So debtor starts off at 249,800. We have to take away the full amount of the debt. So that 4.5 represents 30 cents of the euro. So for every euro he owes us, he's only given us 30 cents back. So that'll be 30%, or sorry, 4,500 divided by 30% multiplied by 100. Should be 15,000. It is. So that's 249,800 minus 15,000. That might change again in a minute. Now the difference between that, the 15,000, and what you've received, 4.5, is a bad debt written off. So that's an expense. Okay. The third one, the last one then. A credit transfer has been received. So again, the bank will know about it, but we don't. So we've received another 9,000 from a debtor who wishes to trade with us again. Now, it's pretty much the exact same as the previous working, just from a different perspective. So the full amount of the debt is a bad debt recovered. So if we take that 9,000, we had written off a debt. It says this represents 75% of the original debt. So if we find the full debt, that's 12,000. So we'd written off a debt of 12,000 before, so now we're getting that money back. So it's a bad debt recovered. Now the difference is we've got 9,000. we're going to get a total of 12,000 back, so we're owed a further 3,000. So debtors have to go up by 3,000. So that's 237,800. So if we've done this correctly, if we check these figures, the two numbers should now be the same. If we've reconciled what we've done and what the bank have done, and if we do that, and that's for some reason not working out, hold on, 48,950 minus 4,950, 60. Made a mistake there somewhere. Minus 26.7 plus 27.6. That should be it, see? Yeah, there you go. So it balances now. So that was a typo for me. So if it doesn't balance, you've made a mistake. Go back and check and see where the mistake is. Patents which incorporate 4 months investment income are being written off. So we need to work out the investment income first. So if we go and look, we've got 4% investments which we got in the first to the fourth. So we've got 4% of 75,000 by 9/12. So the investment income is 2,250. We have received we've received 4 months, I think. So we've received 4/9 of 2,250. So it's up, we've only got 9 months, and if we've received 4, it's 4 months. So we've received 1,000, so we're due to get 1,250. Now, that 1,000 has been incorporated in patents, so it's on the wrong side of patents. So to get rid of it, you actually have to add it back on. So patent starts off at 64, so it goes up to 65. And then they're being written off over a 5-year period, which commenced in 2020. So just be careful with that. We're in the accounts for 2021, so they already have 1 year depreciated. So instead of dividing by 5, they've already, that 65,000 includes 1 year's depreciation. So you divide it by 4. So you've only 4 years left to depreciate it by, not 5. So it's 65,000 divided by 4, which is 16,250, which you need to take away from the patents number. So just be very, very careful on the year that it started. If that had started this year, you would divide it by 5, but there's already 1 year's depreciation included. So divided by 4. Now, if I gave you the cost figure would have been 76,250, and if you divided that by 5, you get 16,250. But it doesn't give you the cost figure; it gives you the value figure. So that's the patents working. So we're nearly done. It says provision to be made for both investment income due and debenture interest due. Well, we've already done investment income due, so debenture interest due next. So if we go and look at our debentures, they're 6%. So 6% of 300,000. So you got an increase of 60,000. So for the first 5 months of the year, you only had 300,000. And then 6% of 360 for the remaining 7 months of the year. So if we add those two together, that's your debenture for the year. Now your debenture interest due will be 20,100 minus whatever we've paid. So we've paid 7.5. So you have 12.6 left to pay. All right, the managing director has the managing director should be paid a bonus of 2% of sales in excess of 1.5 million. So sales commission is 2% of money in excess of 1.5. So it's 2% of 350. Should be 7,000. Now there already is a commission of 32,000, so we'll add that on. So it's debit side, so it means it's an expense. So 32,000 plus 7,000 will bring up to 39,000, and that 7,000 then will be sales commission due. You haven't paid it yet, so you have to add it on. Okay, so anytime you're providing, there's a due involved. Transfer of 250 should be made to capital reserve. That's just something we have to be aware of. That's a movement from profit and loss to finance by, and the provision of corporation tax 60,000 to be recorded. Now I'm gonna just put that in as corporation tax due on my workings page so I don't forget it. You could obviously just put it straight into your answer, which would make more sense, but anyway, I'll just leave it there. Alright, so we have to then, we've got all the workings done, so we're putting everything in. So that's trading and a current asset. Purchases is trading, creditors current liability, equipment is a fixed asset. Depreciation of equipment will be admin, accumulated depreciation will be the fixed assets. The loss will be admin because it's on equipment. Buildings will be a fixed asset. Insurance claim due is a current asset. The loss will be admin. Depreciation of buildings, admin. It's going to be a lot of admins. The accumulated depreciation will be in fixed assets. Bank's current liability. Debtors will be a current asset. Sorry, I missed the bad debt provision, which I'll come back to. Bad debt written off is a selling. Bad debt recovered is other operating income. Investment income goes in its own spot. Investment income due is a current asset. Patents is an intangible fixed asset. Patents written off admin. Debenture interest due is current liability. Sorry, that should be just debenture interest. So it's not. It goes in its own spot. Debenture interest due is a current liability. Sales commission due is a current liability. Sales commission is selling. The corporation tax due will be a current liability. So just to remember to do the provision for bad debts, which will go in as a current asset, as a minus. So it tells us that it's 3% of debtors. So debtors is 237,800. So that's 7,134. And then the increase or the change in bad debt provision, if there is one. So there's a bad debt provision of 7,000. So you have an increase of 134. And that will be a selling expense. So there's loads and loads of expenses in this question. Alright, so that leaves us with land and buildings. We've done office equipment. Profit and loss balance it's a credit, so it's added on at the bottom. Discount, credit, other operating income. Debenture interest paid is done. Investments are a fixed asset. Opening stock is in its normal spot. Patents has changed. Purchases and sales, normal spots unchanged. Bad debt provision has changed, so it doesn't go in. Debtors and creditors are both changed. Bank has changed. Wages is admin. Debentures is financed by. You never do anything with things paid, so dividends paid. Sorry, you do. That goes in dividends. You normally use it to work out dividends due, but there is none. Director's fees is admin. VAT is debit, so it's an asset. VAT is a credit, it would be a liability, but it's an asset. PAYE is a current liability. Commission we've changed. Insurance admin. Advertising is selling. And then you've got your 2 share capitals. So we've lots and lots to go in. I'm going to need a few extra lines in admin, I would say. Obviously, when you're doing out your skeleton, be aware that you've got you've a load of admins there, and make room for them. So sales 1850. Opening stock is 51.5. Purchases is from the workings. So I should have done these out. So 875,600. Just do the closing stock there as well. 75.4. So 8756. And the closing stock is 75.4. So we'll just take them away. You get 998,300. Now you're a min. Right, we've loads of them. So wages and salaries is 1967. We've got insurance, which is 25. Oh, these are all in red. And they're bolded. So then you've got sorry. All right, you've got your director's fees. Of 91,000. You've got where am I at here now? You've got your workings then. So we've got the depreciation of equipment, 70,400. This is the part of the question you can do quicker than me. You've got the loss in the sale, 400. The loss in the insurance claim, 5,000. Depreciation of buildings, 12,800. You've patents written off, 16,250. hopefully that's them all. For your selling and distribution, then you have the bad debt written off of 10.5. You have your increase. Sorry, you've got your increase in BDP was 134. Just see if you've got any more selling. You've got your sales commission 39,000. Conceivably, that 7,000 might go in director's fees either. I'm sure you wouldn't lose marks. I don't know. And then, if you've got any more selling, you don't. So on the first page, you've got advertising of 8.4. So if we add those together and then add your two expenses together, obviously take them away, and you've got your other operating that's 8.4. You have your other operating incomes, your bad debt recovered. Bad debt recovered was 12,000, and any more? No more there. So just checking the credit side, you've got a discount of 17.5. So your operating profit is 552, 216. Now basically that's where sole trader ends and a company account takes over. Well, the next part, sorry. You've got your investment income, which you add on. So we worked out our investment income to be, here somewhere, debenture interest, where is it? We worked it out to be 2250. So we'll add that on. Then we're going to take away our debenture interest, which was 20,100. Okay, so that's your net profit. So that's where your sole trader would end. So net profit before tax, take away tax. So the taxation was 60,000, I think, yeah. So take that away. It gives you your net profit after tax. Then your final parts are to take away your dividends. So your dividends are, they were in the question, dividends paid, nothing due, so it's just 65.1. That gives you 409,266. Now from that, you have to add on your profit and loss balance of 127. And then take away or transfer to the reserve. And that will give you your revenue reserves, your profit and loss balance, so 286, 266. So that new thing, that 250, it'll actually still balance with the exact same numbers. It's just a movement to a reserve. So that's going to go into your finance buy. So these last two numbers are both going into the finance buy. So instead of it just being 536, 266 going in, we're splitting the numbers up. Okay, so exactly like that. And 286, 266. So from there we have to do our balance sheet. So we've got our patents, which I was working on. Tangible fixed assets, where are you? It's 48,750. You've got your land and buildings, which we started off as 1640. The accumulated depreciation was 12,800, giving you a value of one minus the other. You've got your equipment of one of the first workings, were you? 440, and your accumulated depreciation of 131,800. That's 3082. Now make sure you add them up. Oh god. Okay. Add in then your investments. The investments are in the question here somewhere. 75,000. And then obviously add your three types of fixed assets together. That's 209,150. Your current assets, well, we know we've closing stock. First working 75.4. We're going to have debtors less BDP. So the debtors are 2378, and the BDP is down at the bottom 7134. You'll have investment income due. 1250. I'll just check for any more while I'm here. You'll have the fire claim due of 100 and something. 115. So they're the only two from the workings. And then just check and see if you've any more debits. So you've got the VAT of 1,000. There's no debits left now. We've done everything correctly. You'll be ticking these off as you go. Make sure you've got everything in. So that'll leave us with, it's definitely wrong, there's one too many zeros in that. That will leave us with our current liabilities. So we know we'll have creditors, bank, debenture interest due. So they're going to be from the question. So we'll have creditors up at the top. Just do that sum out. So 75,000. Bank is 53.9, and debenture interest due will be 12.6. You also have sales commission due of 7,000. So we'll get those in. 25,000, 53,900 and 12,600, and the sales commission due, or the commission due of 7,000. That needs to go in. And then from the question, you've PAYE 27,700, and you'll have the taxation, of course, the very last one, the workings. Just remember to get that in. It's the one I'd forget if I was going to forget any of them. So take them away from each other and add on your answer. So that'll balance out at 2246,266. So your debentures then, 6% debentures 360. My share capital I should have authorised and issued. If an authorised of 1.5 million up at the top and 1 million. So let's just say authorised and issued. I should have 2 lines for share capital. So ordinary and preference. So you have 1.5 and 1 million authorised up at the top, and the issued is 1,350,000. There's no revaluation reserve, so if you just add those together and then add your answer onto the debentures, hopefully this balances. 224,266 balances. So so just the things to be aware of in that: the residual value in the depreciation, the commission, the bonus, and the capital reserve. They're sort of newish things, but not without being too new. So hopefully that's of some use to you. We'll see you next week.